Yo, what's going on, everybody? It is Thursday, July 20th. We had a mixed market today. Dow was up, NASDAQ was down pretty sharply on Tesla and some other stocks. And this could be the beginning of the correction that I've been talking about. Although I have to advise you that the correction could be choppy, at least going into the second half of August and September, where I think it'll go like straight down. Because September, obviously, fiscal flows, like I've been saying, are going to peak on August 15th. Look, we still got August 1st, which the first of the month is always a big fiscal flow day because you got the big payments that go out the first of the month, like Medicare, Medicaid, military pay, veterans benefits, disability, all that stuff. It's like 100 billion. It's like 100 billion day. And then you got August 15th, which is going to be a quarterly interest payment. That's going to be like 51 billion. So we can pop up on the flows and that could support the market. So, I mean, if you're short right now, or if you're raising cash, my advice is you just, hold those positions or continue to raise cash if the market rallies back here. Because as we get into September with that quarterly corporate tax strain, and then there's another tax strain in October, those are typically bad months for the market. So I wouldn't get nervous. Right here I'm long the dollar now. I've been short the dollar for months. I made a lot of money and now I'm long the dollar. That's doing well. I'd be short gold right here. I'd also be like a little bit short oil, not like a super aggressively, but last week was, I think, the first week in like 9 weeks or something like that producers were selling oil. So I like to follow them. And anyway, oil is going to follow whatever the equity market, whatever stocks do, oil is going to follow that. So everything is kind of playing out as I said it would. Now, I want to talk about something like every day just fascinates me. There's something in the media, I don't know, but I've been following the campaign of RFK Jr. I like this guy with his stance on these endless wars. Like, we got to stop this. We got to invest at home. Like, I totally appreciate that, and I like that. And I've been saying that for a long time, and that's what we need to do as a nation. We don't need to be supporting Ukraine and giving them hundreds of billions of dollars, and NATO it's not for peace. NATO is a warmongering organization, but anyway, I'm not going to get into that. That's political. But I want to talk about RFK Jr. from a monetary perspective, because yesterday he came out and he said that if he's president, he would peg the dollar to gold or Bitcoin. And when I saw that, I just SMH, shake my head. Like, I cannot believe in this day and age that this viewpoint still exists. I mean, we have hard money economists who still who now, don't even believe in this. And the only people who support this viewpoint are these kind of economic quacks out there who sell doomsday all the time. But here's the thing, folks. It blew my mind that, he's a Harvard-educated dude. I mean, in this day and age, to still think that you need to peg your currency to something which you are no longer an issuer. In other words, give up your currency sovereignty for some unit which is finite, like gold or Bitcoin, and fix, your currency to that. I mean, it is just absolutely absurd. I can't believe that this view is still out there, nonetheless, even espoused by a presidential candidate who is being taken seriously right now. Like, I lost all respect for this guy, even though I appreciate his war stance. And I think he's absolutely right on that. But when you come out and you say something like this, it's ridiculous. I mean, everybody should know this by now. Like if you have an economy and if you have a growing population and a growing economy, look, I've given the pizza pie analogy. Let's say you got 8 people in a room and you got a pizza pie with 8 slices, okay? Everybody gets a slice. Now, another person comes in. That person represents either growing population or a growing economy that needs, it needs money, it needs liquidity because that's the unit of transaction. So another person comes in and now you have 8 slices, but you have 9 people. So somebody's either not going to get a slice or everybody gets less. Now you have 10 people. So now it's going to be 2 people are not going to get a slice or everybody gets that much less. And it keeps going on and on like that because the pizza is finite. There's just a certain amount of pizza. And when you add to those who need to share the pizza in order, in our economy, it's the dollar is the unit of transaction. And we need that to transact. I mean, so like it has to grow. The amount of dollars have to grow with the economy. And plus, if the government is imposing taxes, how do you suppose you're going to get the dollars to pay those taxes? The dollars have to be spent into the economy so that people have the dollars to earn and to pay taxes. And I've also used the analogy in the past of the Monopoly game. If you've ever played Monopoly, I guess most people have. I don't know, maybe if you live in a foreign country, you never played it. But most people from the United States have played the game of Monopoly when they were kids or whatever. The game has to distribute the money first. All right, that's the way it works. If you land on Chance or Community Chest and it says pay $75 tax, if the game didn't distribute the money, you're unable to pay that tax. You just don't have the money. The game, so what is the game? The game is the government issuance of dollars through spending. The spending adds to, the availability or the dollar supply in the economy. And we go out, we're industrious, we're productive, we earn that, we work, we labor, we earn those dollars, and then some of it we give back in the form of taxes, and then it's spent right back out again. And ostensibly, if you're a productive person, and if you're a smart person, and if you know how to make money, you recoup that, and then some. That's why normally people's incomes grow and stuff like that. Now, there could be impediments to that process. There could be economic environments, which that's not the case. But in general, that has been the case for 200 something years of this country, basically more or less a democracy, free market system, whatever. So the idea of giving up the dollar and like basing it on Bitcoin or gold, I just it blows my mind. It blows my mind. I have to say that he should be more savvy than that. He should have a better understanding. I don't see how you could run like Trump. He really knew this shit. I got to give him credit for this. Like I remember in the 2016 campaign, and I voted for Trump in 2016. I didn't vote for him in 2020, but I didn't vote for Biden either. I just kind of threw away my vote. But in 2016, Trump was saying all the right things. Like people would ask him like, what about the debt? He's basically like, there is no debt. We print money. We're a sovereign currency issuer. And so we're not going to become insolvent. We're not going to go bankrupt. And he was absolutely right on that. And then with Social Security, he was like, I'm for increases in Social Security. He was absolutely right on that. And like he did tax cuts, like right now, taxes, individual taxes, corporation taxes, not so much, but definitely individual taxes are extremely high over last year. I think it's something like $200 billion maybe more than, I got to look at my numbers because I record this every week and it's in my report. Something like 200 something billion over last year. That's a big fiscal drag. Okay? Now we're getting an extra 200 billion from interest payments. You know, that's interest on treasury securities, and that's like the discount on T-bills and new issues. So that's kind of wiping it out. But like even a small tax cut right now would boost the economy incredibly. But we don't have an administration, we don't have a Congress who is going to go along with that. So, you know, we're lucky in a sense because the leading spending flows are so high that it's enough to sustain a positive economic growth. And that's, I've said this so many times, like the stock market does not control the economy. People think like the stock market leads the economy. It doesn't. The economy leads the stock market. If the economy is growing, the stock market's going to go up. It's very, very simple. There might be corrections along the way. There might be blips along the way. But if the economy is growing, that means corporate profits are growing. That means people are earning more money. You know, people are working. I mean, that's just, it's logical. I never understood, and I've been involved in this business for over 40 years. I never understood people who said, well, maybe back early in my career, I was one of those people who thought like, it's the stock market that leads. It's not. It's just not. So, I mean, as long as you know, like I've given this speech so many times before, you know, if you know the macro environment, if you know the big picture, very simple questions. You could distill it down to very simple questions. Is the economy growing or is the economy contracting? You don't have to be like, wasting time on these super micro kind of analyses that are meaningless. What's the next fluctuation going to be? Just very simple. Is the economy growing or is the economy contracting? Is there an element out there that is going to sustain growth? Yes, it's these leading spending flows by the government. Sometimes it's bank credit, but like I've been saying, like now we're seeing bank credit contract. But that's because there's so much leading spending flows going into the government that people and households and businesses need to rely less on credit. It's very simple. I mean, you really have to distill it. If you want to make money in the long term, and if you want to be wealthy, and if you want to be rich, it's not this in and out bullshit. It's like, just have the macro picture in your head. That's it. And when the market goes down, I just said yesterday I was taking profits on some stocks, and I'm glad I did because they're down now. Just have the macro picture in your head. And like I said in the previous videos, I've spoken to people who they proclaim themselves to be bottom-up investors. What does that mean, a bottom-up investor? It means they look at balance sheets, they look at cash flow, they look at all this kind of financial, stuff, which is great. I don't have that education. I'm an economist. But like I say to them, in a bad environment, I don't care how good your numbers are, the stock is not going to do anything, and vice versa. In a good environment, even crappy stocks are going to go up. So wouldn't you rather understand what the big picture is as opposed to doing this micro analysis? They're like, no, we don't need that stuff. Okay, fine, you don't need that stuff. I need it. And we saw the other day, I don't know if I mentioned it, but a lot of these guys who are big shots, especially in the real estate industry, and they're basically bottom-up investors. They look at, cap rates and this and that when they invest in real estate, which is fine. They know these numbers backwards and forwards. But I mean, they're all in trouble now. This Barry Sternlicht, who's like a billionaire real estate investor, and he was a hotel owner before that, he missed a debt payment. He's in default because he wasn't prepared for what's going on right now. You gotta have the macro perspective. This is what made Warren Buffett as rich as he is. He doesn't sit around. Do you think Warren Buffett sits around staring at a trading screen? I mean, come on. I hardly ever look at a trading screen. I just stick with what I do, which is the fiscal flows, and that's the most important thing. So anyway, yeah, that's the update today. That's RFK Jr. wants to. I mean, it's just a crazy idea, folks. It's just a crazy idea. And I can't believe that this is still out there, that it's being promulgated by somebody who's like very, very educated. I mean, it's just a ridiculous idea. You don't want to give up your currency sovereignty, especially the United States of America. Like if you're some small little country and you need to import a lot because you have nothing, because you live on some island or something, I could understand maybe adopting some other currency because you're forced to. But the United States of America doesn't have to do that. And to think we have to do that is just absolutely insane. It's absolutely insane. I lost a lot of respect for this guy. Anyway, that's it for today, folks. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Learn, advance yourself. See you tomorrow. Bye.